All right, my name is Matis. I'm an entrepreneur from Latvia. I do business in fintech and lending. My companies all around the world do over 100 million in revenue. They're profitable, and I am spoiled to have the time to do these videos whenever I am inspired by some interesting topic. And lately, I've been inspired very much whenever I do a banking payment out from a Latvian bank or into a Latvian bank. It is really one of the most amazing experiences in my life. And I think this is shared across feelings of other entrepreneurs in Latvia and in the Baltics in general. And I think the one thing that people that do business here in this region hate more than they hate, paying ridiculous taxes to stupid institutions, is they hate AML questions from banks. So this topic is really inspiring, and I thought I'll do a whole video about it. Gone are the days basically where, up to until I think 2016, 17, you could have an offshore company, you could do payments, and you would not have to explain that you're not a terrorist or a criminal, every 2 days to another analyst in another financial institution. So that's all gone. There was a lot of foreign, or in other words, Russian money sitting in our banking system. Almost up to half of our deposits were made up of non-residents. The US government came in 2017 and they said, let's stop this, it's too much, let's cut this, there's too much dirty money. And the Latvian government, being loyal servants as they are, they nodded their heads and they said, okay, let's take out all of this money from the banking system, whether it's dirty or not dirty. And then basically a couple of months later, all the non-resident deposits disappeared from our banking sector. In this wire transfer from my bank account, Luminor to Bitstamp, it got arrested, I got questioned, my whole bank account got frozen. I had hundreds of thousands of euros sitting there. I had to explain transactions going quite a few years ago into my account, which did involve 2 or 3 months of frozen account with no access to that capital. When I gave all the explanations, all the documentation, there was absolutely nothing illegal about what I did. They said, thank you, fuck off, take your money out, we're shutting your account. So that was one experience. It's a stamp of approval when you're an entrepreneur. Your bank account gets closed, and that means you're a real business guy. All right, so now let's look at the other side of the coin. Since the 90s, oligarchs, countless crooks from Russia have stolen billions of dollars, euros, you name it, and have funneled that money through Latvian banking system. Interestingly, it's not only the small banks. If you really think about it and you look at the biggest numbers, Danske Bank was a bank that facilitated over 200 billion euros in transactions of stolen money out of Russia that was funneled into Europe. They paid a fine. The head of the branch in Estonia of Danske Bank, or the head of the CEO of Danske Bank in Estonia, I forgot which one it is, did a suicide. The former CEO of Swedbank was fired over 30 billion in fraudulent transactions. Again, Swedbank pays a fine and they move on, because they're great institutions. So one of the summaries of this video is that banks are the pillars of morality and compliance and legality in the business world. They never do anything wrong, right? It is the small SMEs, small, medium entrepreneurs that steal all the money, they finance all the terrorists, and we traffic people. I mean, that's what we do. And thank God the banks are there to stop us from doing that. All right, let's hear from somebody who's an expert in compliance, in banking laws when it comes to sanctions and money laundering, etc. Because it's not fair that I just trash talk about this from my own personal experience. And that's why I've invited this person to give a more balanced view, a better, broader perspective. Let's continue with the interview. Stay safe. Always have more than one bank account open. See you in the next video.
And it ended up quite good. I was hired there as assistant to a judge, and later on I found out that they actually were looking for the other person, one of my friends with whom we have.
So they mixed the names, or
we have been confused quite a lot. We don't look alike, but still. And that was the first time, and the second time was that he was refused the job because they thought that he's me.
Okay.
So he has suffered because of me several times, but now he got his career back on track. So
that there's it reminds me of this series Suits, yes?
Yeah.
The New York lawyers, where the super genius guy, he was running away from some weed smuggler or something. He got into a harbor or like some kind of a assessment center for the law firm or something like that, and then he got confused with somebody else and got the job. Yeah, it's a bit like that.
And when speaking of like anti-money laundering or sanctions compliance, those qualifications as a lawyer, they are not always useful. Sometimes you need to be just a smart person. You have to switch on your criminal mind to understand how criminals might think and to understand risks and assess risks. Lawyers sometimes say it's legal, you can do that.
Right.
When it comes to anti-money laundering, like 50% of that is not based on just on laws and regulations. It's based on risk and understanding. For example, you can distinguish Doberman, German Shepherd, and Labrador.
Yeah.
Most probably Labrador would just won't like to lick you.
Yeah.
And that is it. And the same goes with IML and risk assessment. So you need to be able to understand where are the threats and how and where are your vulnerabilities. So and to find the common sense there. Lawyers usually they tend to go for rules-based approach. So it's written there. Sometimes the thing what is legal, for example, bearer shares. That's a legal instrument. So the person who called them is the owner. So no formal registration.
Right.
From legal point of view, in many jurisdictions, they are not forbidden. It's a legal instrument in many jurisdictions. But from point of view of risk, it means that you have to understand that those are allowed instrument. This is allowed instrument, but still they pose risks that they are usually used for money launderers. Just to say, because there's no formal registration, so it means you can the owner can change in minutes.
Right. Right.
So
it's like cash.
It's like cash.
Yeah.
So we have to find this distinction between what's lawful,
right,
and how these lawful instruments can be abused or used for illegal purposes. So that's the difference with those qualifications you need to have when you work in anti-money laundering or sanctions compliance. So to look, I would say, outside the legal box.
Yes.
Just to see how people operate, how they behave, what is typical, what's not typical. For example, if someone runs a restaurant, so you need to be able to assess how the restaurants are usually managed. So, for example, usually restaurants are used to make cash with cashless payments. So maybe the owner of restaurant is doing drugs,
right?
And then he has to launder the cash. So the restaurant is quite convenient for that purpose.
Yes.
And in order to catch this person, you need to understand whether, for example, the orders of the restaurant, how raw meat they are ordering, how much of it. So and then to see what are the customer base for this restaurant. Do they have like 5 tables or 55 tables? It depends on the turnover. So when analyzing all those aspects, you can understand that technically this business is functioning sort of or pretends to function legally. But if you crunch the numbers, you see that something doesn't add up. So and then you need to ask additional questions. Most probably report this business to authorities.
Okay, if we take a step back, can you maybe talk a little bit about your career? Like generally, in kind of episode, you spoke about the time you spent in the government and then now in the private sector. Maybe like just run us through the key parts.
Doing a quick introduction. So I started my career in public sector like 23 years ago. 21. So I already got confused with that. So 21 years ago, working for Constitutional Court as assistant of judge. Then I moved
kind of by accident. Yeah.
Kind of by accident. However, the accident turned out quite well.
Is it how to say, cool and prestigious to work there?
Yeah, it's definitely, it is, and it was. Back then, you didn't need to have a master's degree when you started the position there.
Now you do.
Now you actually you do. Maybe you can, they might hire you with bachelor's degree, but usually it's not the case.
Yeah.
Back then, in early 2000s, all the doors were open for young people with more or less decent education. Then I moved to the legal department of Parliament of Latvia, so spent quite a while there, working with all the laws that are submitted by the government, checking them, reviewing them, so proposing new amendments to them, and so on. Later on, I moved to Chancellor as the President of Latvia. I was legal and legislative advisor to the President, which gave me quite a lot of insights how the government works, how politics operates.
Right.
So then, short time, had a project in State Audit Office. So some insights of how audits are being carried out was there, so that was quite useful. And then I moved to private sector, so mostly worked for Brenius, now Cobalt, the same company, just after the merger.
And private sector was, like you said, 8 years ago or 6 years ago?
Sort of 8 years ago, more or less 8 years ago, and then I started to work with financial sector, so non-bank lenders, banks, industry associations, large corporates, advising them on compliance matters, licensing, regulatory. And quite recently, I passed 2 certifications. So it's certified anti-money laundering and certified global sanctions specialist with US-based certification companies. So that's more of US compliance, of course, but the same more or less applies to Latvia as well.
And these qualifications, is it part of, let's say, it's your own voluntary choice that you
that's my voluntary choice, because I've been working in this field for 6 years at least. So now, how can you prove that you actually know something? Of course, if the person knows you, they understand what are you capable of. Here, you need some formal certification that, hey guys, I'm not just a lawyer. I'm legit. I passed the exam or 2 exams. And for financial industry, those certifications are sort of standard. So if you don't have them, most probably you won't be hired by a bank in some mid-senior or senior position when it comes to anti-money laundering or sanctions compliance.
Okay. So last couple of years you've been working on the compliance, sanctions, etc. side. Can you, because I think me personally, as an entrepreneur, I do not understand in detail what that kind of a job of working with AML, with compliance, sanctions, what does it involve on a daily basis? And I guess there's a difference between if you work as a specialist in a bank or as an executive in a bank that is responsible for that area versus if you're a lawyer like you are in a law firm. So maybe first, if you could tell, like on a practical basis for, let's say, a small, medium business owner in Latvia or in the Baltics, so that they would understand what do guys like you do on a daily basis? What's the regular kind of thing that you do?
Okay, I work with those media, those SMEs, and also large corporates, not only financial institutions. The mindset is different, but the handbook or the rule book is the same, more or less. So let me provide several examples. First one would concern, for example, non-bank lending business. So I worked and sometimes work now as well, also in the field of AML with those institutions. So issue loans, your loans are getting paid back, hopefully. So it depends on
some of them.
Yeah, some of them, at least some of them. Yeah. So what do you need to know? You need to develop some compliance program where you. Because your objective is to earn money and not to be involved in any illegal activity. So you're a clean business. So you care about reputation. So in order to deliver that, you need compliance program. What are those main key factors this compliance program consists of? So first of all, you will be applying this risk-based approach. It means distinguishing. So know the difference between German Shepherd, Labrador, and Doberman, or any other breed of dog.
Right.
So you assess your risks. What is your customer base? So who are your customers? For example, you say you work only with individuals.
Yeah.
Let's say so. So it means all the threats that you could face from legal entities, like hiding their beneficial owners, registration in high-risk jurisdictions, so shell companies. It doesn't exist. It's not relevant.
Okay,
so you now have spared money like for for hiring at least 5 employees in compliance.
Yeah.
So
Yeah.
you have quite a lean process there.
Yeah.
Secondly, you need to identify your customer. You look for some more or less secure tools, how to know who are your customers. Are they real or are faking their identities? Then usually comes the most interesting part. Of course, source of income, it's quite easy. You obtain them from state registries. So so also the risk of using illicit funds are more or less mitigated.
Right.
But still, they might repay the money from illicit funds, for example, from bribes, or third parties would repay them on behalf of those customers. So then you need to set up some monitoring systems. So
what systems?
Monitoring systems.
Okay,
so transaction monitoring systems. So if your customer is using his or her account, paying from some decent bank locally, not from some third country, for example. So you are quite, and they're keeping up with the schedule. So you are quite comfortable with that. Then there's some customers called politically exposed persons. And what we see, it's a wrong thing, and it's not risk-based approach. Right. So you say we are not servicing politically exposed persons. So why?
Politically
exposed persons like members of parliaments, ministers.
So politicians, not maybe a wife of politician.
Also wife, and here in Latvia, it's not only a wife; it could be also some grandchildren and grandparents, also judges or some high-ranking military or other officers.
Right. So the procedure in the company might say that we're just not dealing with clients.
Yeah, and that's not a good thing. What I would like to explain this risk-based approach against rules-based approach. So this narrow rules-based approch say, why do we need those politically exposed persons? We don't work with that.
Yeah.
And usually ask why. So what is the reasoning? I would just know they're mentioned in the law as high-risk customers, but you know what the risks they pose actually? No.
Right.
So the risk is corruption. That's the only thing. So someone will give them bribes, or pay on their behalf. Right. So set up the monitoring system. So check those thresholds. Is there any person, third party, paying on behalf of them? Do they go to the money remittance service like Edgars Pastars and pay in cash? It also could be a risk factor. If they don't, if you see that their loan corresponds with their income, you can find publicly. So there's no adverse media about them. Right. They're not involved in anything. Why don't serve them?
Deal with them.
What one of the examples was one politically exposed person complained to me that they tried to buy a phone in some using a loan, and they were refused because they are PEP. Right. And it was like 300 or 400 euros. So why? So what risk you could have here with 300 or 400 euros? Yeah. And this person would pay it back from his or her account. So this is the risk-based approach. So what we do as lawyers...
Not rule-based approach, but risk-based approach. Yeah, and you as lawyers help understand that you can...
So not only follow those rules-based approach, but to assess your risks.
Yeah.
So where are you working? In what geography? What services do you provide? For example, simple loans to or low volume loans to local residents are less risky than, for example, to be in the real estate business and looking for consumers from third countries to buy this real estate here. So this also is something different. And of course, for example, when you go in comparison to the real estate transaction, so the real estate transaction usually they are usually used for money laundering. So they're quite popular for that. So people got their illicit cash.
Yeah, and they
would like to buy something, then sell something. So here, those are completely different risks. What we as lawyers, not only lawyers, but also certified specialists, help our clients with is to understand in which risk environment they actually are, what they should do, what they should not, and of course we ask for their risk appetite. Right. So some of them say reputation is everything for us. Yes. So our financing banks, for example, in UK, wouldn't understand that we would cooperate with someone. Yeah. So in this case, we say, okay, this is something that the law requires. This is your risk assessment and your risk-based approach, and this is your risk appetite. So sometimes this risk appetite is formulated not because of just reputational issues, but also to save money. Right. For example, you have a bank. Bank locally here, services, students, pensioners, small, medium enterprises operating locally. And then here comes a customer who says, I would like to work with some trading partners in Nigeria.
Mm-hmm.
The bank says, of course, I could do that, but there are two things. My commissions are not that high to finance those compliance issues arising from this
Dealing with
particular transactions. Secondly, I have no knowledge about Nigeria. I know where on the map the country is, but I don't know anything about the risks there. So I have to hire something. So then I would like to count. So how much money I would earn from this customer if it's alone or there are 2 or 5 customers. My customer base is like, I don't know, 100,000 of those local persons. Why do I need to go in Nigeria? So it means that you could compare it with you're going on hiking, for example. It depends where you go to Siberia, Canada, or mid-Africa.
Yeah.
So you would take probably different clothing. You will choose something for the protection against some local animals and some insurance.
Vaccines. Yeah.
The same goes for here. So if you go in markets you are not aware of the risks there, or then you have to study them. It means you have to do your cost benefit analysis and. Are you actually able to manage those risks?
Yeah.
The good thing is that in the market there should be some financial institution that could serve those customers, because for example your payment won't cost 38 cents.
Yeah.
But it might cost 800 euros.
Exactly.
And you get the service.
We know that.
Yeah. And this is how the market it hasn't been shaped in this way for a while, because everybody served everybody.
Mm-hmm.
Now the market is being divided by those who work in niche products and those who work in retail.
Mm-hmm.
And it's one of the main mistakes some companies with specific products make. They go to retail bank with a product which doesn't fit in their risk profile at all.
Yeah.
So and also for lawyers like us, we have to guide them, saying this product is something out of the ordinary, so you should go somewhere else. And besides, European Union has done an amazing job harmonizing financial services across Europe, and it doesn't matter whether either you pay from Lithuania, Germany, or Latvia. More or less, the fees should be the same.
Yeah.
They are not yet the same everywhere, but they should be the same. So that's how, and we are the sort of guides. We're guiding through those questions.
Mm-hmm.
Small, medium enterprises, they also have their issues. For example, bank asks them a question. This bank asks them a question. So please explain me this transaction. So what I have seen that they are getting jumpy and defensive. That's something you should not do.
Right.
Then they're getting over it and start explaining in quite a legal manner what they have done with this transaction.
Let's go to
the second mistake.
Let's go to this example, because that's a big part of what I wanted to ask you about in terms of banks asking questions to companies and so on. But as you were speaking, I was thinking about, have you had examples where a potential client comes to you, wants to be advised on their AML procedures, etc., and you understand that company is breaking the law? Have you had that?
Yeah, sure.
And what do you say? Thanks, bye, or you just increase your fees?
No. There are 3 types of actions that could be taken in this regard. First of all, if but many clients, they approach lawyer because they understand that they might be in some trouble. And our first mission and main mission is to guide them through those stormy waters and to make them compliant. That's first objective. But if you see the company, they are not looking to be compliant.
Right.
They just want to be not to be detected.
Right.
So then you assess what is the reason of non-compliance. Mm-hmm. If they are in money laundering business or breach of international sanctions, then you understand that are they committed and can we help them to be compliant? Mm-hmm. If you see that there's no commitment, their business model is breaking the law.
Right.
Then there are then two actions possibly you could take. Actually, both of them. One of them is refuse to enter in business relationship with them, because it might not only get you in trouble, but also toxic, then you assess what kind of service they are requesting. If they're requesting, data protection policy, and you see they are a bit shady, maybe not fully legal, but shady. Okay, that's a low risk service for them. So If they're asking for real estate transaction and consultation regarding that, okay, that's a different story. And third one, at some point you have to report them.
Yeah.
So you are under obligation of reporting.
Yeah.
So you assess.
Can you shed a bit of light on this reporting?
Reporting that is when you see clear. So usually money laundering takes within 3-4 years. You have a lot of people here locally and abroad. They have already completed their money laundering scheme. So most probably you won't catch them. But you have to look for, I would say, fresh money laundering. So ongoing money laundering in one of the stages. So if you see that your client, or in my case mostly those are my clients, not the client, they are involved in something like that, and you know the details enough for reporting, you should report. It means that you report to Financial Intelligence Unit or State Security Service if it concerns sanctions, that you have found that this company is actually now in ongoing money laundering scheme.
Have you had situations like that? In your experience?
You know, this, I would say we are compliant with the law. I'm not at liberty to share any of those, but of course, if it is necessary, it is done. So, but there is a thin line. The lawyer needs to understand where the client needs assistance,
right,
to be compliant, and when this client actually is using you to complete his illegal schemes. Right. And actually we had some of those in the past. So when you clearly see that actually we should have refused taking this client, but this is quite rare. Right. We took the client, and that's actually the good thing. Sometimes reputable companies refuse clients saying, "Oh, you have some reputation problems there. We won't take you." And then they go to some others who say, "Okay, it doesn't matter for me. I work with everyone, and definitely I won't report you." And if this reputable company takes such customer, is it a bank or a law firm? Doesn't matter. They can catch the criminals. So if they're committed to the culture of compliance, they can detect that they are being abused and used by those criminals, and then they say, okay, then we try to stop them. So that's our legal obligation. We do so. So just refusing the clients, you actually are risk averse, and they are finding some shadow banking systems and so on.
It gets
so
worse.
So just to refuse them or de-risk them, offboard them, it's sort of an easy solution for you. You sort of clean the house, but actually then for authorities and for other entities, they are under the radar.
Harder.
They're continuing what they have done and will do so in the future.
Okay, very interesting. Can we talk about banks? So have you worked with banks?
I'm doing all the time.
Okay, good. So a big reason why I was thinking about doing this video and also having a conversation is to maybe like vent a little bit of frustration with with banks, and I think many entrepreneurs, whether successful and big company owners or small, medium company owners, they share this sentiment that one thing they hate for sure is when banks ask these questions and they seem ridiculous and so on. I just wanted to unpack, that sentiment that we have in the market and understand the bank side a little better, to understand why do they ask that many questions, what's the, how many of those questions and the compliance rules does the bank itself adds versus how much is required by regulators. Yes, so that's kind of one of the questions. But maybe if we could start by talking about why are we in the situation that we are in here in Latvia, where we have, and also in the Baltics, where we have such strict compliance requirements from the banks when they deal with customers. In the past, we were in the other grave, or on the other side of the ditch, where we had these massive money laundering cases, like floods of cash slushing from Russia through small banks here, through like shell entities, etc., which is obviously very negative and bad for the economy. But how I feel like we've gone on the other extreme, where any normal kind of entrepreneur or company making regular payments, they constantly get harassed. Maybe not the right word, but they have have to deal with these questions from banks, and oftentimes they're just completely ridiculous, absurd, and you have to basically explain you're not a criminal every time you do 10K payment from Swedbank to Swedbank or similar kind of instances. Can you talk about why are we in this position, maybe like from a kind of context perspective, how it's all evolved?
Yeah, as you mentioned correctly, sentiment of that something is now quite different and maybe in other extreme. So that's quite right. And this sort of plague is going around. It's not just spreading around. It's not just Baltics.
Yeah.
But first of all, let's get back like 20, 30 years just
so 90s.
Actually, only in the world, not here locally.
Right.
In this anti-money laundering as a concept, as something that you should stick to, started like I would say in more professional and institutionalized way only late 90s, 90s, 80s, and but you know the world lived in a different way back then. So they had those tax havens and offshore companies, and everything was quite right because it suited it suited London, New York, and other metropolitan areas. Before 2008, before 2018, of course, the business was based on money in, money out concerning Russia. It's good that we dealt with that. Right now, with war in Ukraine going on, we would be in a complete mess if we now started to clean the house.
Dirty,
When you clean the house, usually you do more than sometimes it is expected.
Right.
So you don't have enough time to go through all your customers and all the details. You just de-risk, massively de-risk, and then look what's left, and then maybe take some of them back.
And this happened, the de-risking of the banking sector happened, 2008,
2019, 2018, so 2020 as well.
Is this only in Latvia, or we're talking...
No. The risking is quite popular throughout Europe. European Banking Authority recently, they started discussions and is about to issue guidelines, so already issued missed that maybe on the risking. So how to tackle the risking? This plague is going around.
Yeah.
So and the risking means that you are pushing criminals actually, or even other persons outside financial sector to shadow bank. Not only criminals, but also people who might be harder to do diligence on them. So it means it's under the radar. So when we completed the house cleaning here in Latvia. Now we have to learn. So if the person don't know, this person doesn't know how to swim, you need to learn how to do that. Right. So the same goes with the risk-based approach.
Right. So the person here, you mean in the analogy, you mean the bank?
Bank. Yeah. So banks now are learning how to swim. I would say they're doing their first steps, because before 2018 it was all rules-based approach. So you had massive non-resident business. And you stick only to checkbox approach. So you have done, documents are there. Okay, that's good. Yeah. Now you have to forget all of that, and
sorry, that was a rule-based approach.
A rules-based approach.
Yes.
Because it was you couldn't manage the risk otherwise, because it was the level of the risk was skyrocketing. So then you had to lower the risk level, and the most convenient and fastest way how to do that is the risking. Then you have to learn how to swim. As it applies for the banks, then you start to apply a risk-based approach. So to understand which transaction should be closely monitored and examined, and what questions asked for your clients. It was all good, more or less. We had additional guidelines and training, so new employees should also receive their training to be able to do that. But still, there was one issue, 24th of February. Then the sanctions hit, and then sanctions and AML sort of mixed.
Right.
Because now, for example, imagine you're a bank. You have a transaction, your client is looking forward to do, or it has received in his or her account, and there's just invoice number.
Right.
10,000 euros. You'd say, weird. Is it sanctions compliant or not? So then you have to ask for underlying documents, or asking questions about this client. Maybe this client, sort of the alert was generated, then this client has some connections to third countries, or oil business, or has some Russian owners or business partners to the bank. Usually, based on their the information available to them, they know this. And then you were asked about this invoice.
Right.
Please provide information. So now it's not only AML, it's mostly sanctions because those payments are a bit late. You have to even wait for a month or 2 weeks just because of the enormous amount of sanctions and checks should be done. On many instances, I would say those questions are not always on point. I also do the work, then I prepare replies on those questions as well. So on behalf of my clients and of course on behalf of our law firm as well. Yeah. And what I see that when preparing those questions, my experienced colleagues, lawyers, they don't understand what is being asked of them. So when I looked at the question and the client, at first sight, I understand what they are concerned about. So what is their thinking behind those standard questions, which sometimes even sound like a bit harassing, so quite aggressive. So I understand what they're looking at. So and then I can I would say in language understandable to everyone, explain what the service was about, what we did not definitely concerning this client. And those explanations are usually accepted by banks. Right.
Because that's the language that they expect, and I understand.
They need to fill the form when the alert is generated. They have to somehow deal with that.
The suspicious activity.
It's not always alert now. Then it's been after alert is generated. It should be investigated and then decided whether to close the case or escalate the case. Right. Escalate means also reporting later on. Yeah. Probably. Yeah. But this stage is just initial assessment. Right. So you have to provide those geography, service, client, so what you did. And the main mistake is being defensive. Forget about that. That's your first mistake, because many clients are off-boarded just because they got defensive and didn't provide anything. Secondly, don't go fully in a legal scope. What does it mean? It means this contract was concluded, it's legal, this service is not forbidden, and something like that. Provide your business thinking, why you did this transaction, what was the economic purpose of this transaction. Sometimes consultants, tax advisors, and lawyers propose such weird schemes which look like clear money laundering, but actually it is not. So just provide your thinking why you did what you did.
There needs to be an economic rationale. Yeah.
The economic rationale. Okay. And then this alert should be closed in your favor. Of course, there are some minor cases.
If we repeat, don't get defensive and aggressive. Don't
go fully on legal scope. Yeah. But help the bank
understand the logical reasoning why you do the transaction.
Follow the money, risk-based approach, and business thinking. What was the economic rationale of this transaction? What you did, or what you definitely did not. Because they're looking for those grave sins. What you could have done probably, but then you have to explain, for example, that this transaction was, for example, lawyers from law firm like us say we haven't consulted this client regarding the real estate in this process. It was just a consultation on some small question. Of course, this is a real estate company. We didn't do anything related to any transaction. Just asked about personal data privacy or privacy policy, or they asked about some article in some regulation about sanctions. So, but they didn't ask anything else. So we didn't help them to build anything. So no transaction and so on. So then they say that this risk of service provided is much lower than because they don't see it from the invoice. You don't write like military goods, bribes, or something. You write something like something neutral usually. Yeah.
Okay. So you were mentioning an example with like an invoice payment. Do I understand correctly, or how do we see this in terms of the scope of when the sanctions checks and the AML checks apply? So there's one approach where any transaction that goes through a bank's bank accounts and bank's infrastructure, all of them are accepted as suspicious, and every single one of them you need to check.
No, it's not.
Of course, it's not like that. Yeah?
No, it depends. Of course, if there's a small bank working only, for example, in Nigerian or Russian market, for example, then most probably all transactions with Russia now would be done manually.
Every single one needs to be checked.
Most probably that they will be done manually. It means they take time.
Okay.
Or there's a second choice, just to close Russia at all.
Okay.
So it depends on the bank's choice.
That's understood on Russia.
Secondly, when it comes to, for example, local transactions here in retail bank, you can't check them all. That's why it's risk-based approach.
And you shouldn't, because basically
it's
all
not
you're
possible.
saying, you're assuming that every single transaction is potentially fraudulent, which is absurd.
You can't do that. What you do, of course, is to set up risk factors and rules where you see that where some illegal activity or illicit funds are most probably with a high probability.
And those rules can be automated. Those are normally automated.
They're always automated.
They're
always automated. You look for risk factors, adverse media, gathering data from several registries and matching what client information has provided, what its previous background history. For example, he has never been trading with Spain or trading only locally. Now he has enormous transactions to Poland or Spain. Why?
Right.
What has changed in his profile? So he haven't notified about any risk profile changes or something like that. So on an automated basis, then alert is generated and you investigate it. So this is when you look at illicit funds used in gained from money laundering or illicit funds, they are in the world. There are $3 or $4 trillion annually.
Okay, out of the GDP of 100 trillion or something in the world. Okay, I might be mixing up.
In the world, 6 trillion at all.
Yeah.
More or less. Only 1 to 3% maybe are stopped.
Maybe are what?
Stopped.
Okay.
By banks. By
the rest are just flowing.
Just flowing around.
Yeah.
So it means that you won't be able to catch them all.
Sure.
For example, if you're a decent customer, you have cashless transactions mostly, but at one day you steal 500 euros from your colleague, for example, and then you make a deposit in the ATM. Most probably you won't be catched by the system. If you do, if it's like 10,000 or 8,000 or 5,000, that might be something different. Or you don't have any cashless payments at all in this account,
and then all
of a sudden you appear with a stash of cash. So then most probably you will be asked questions and most probably reported.
Okay, your own assessment of how well have we gone through this process of de-risking in the banking sector over the last couple of years? Would you say that we are getting there? We're doing a decent job? Because my feeling is we're doing not a decent job. It's a pretty terrible job, and as a consequence, a lot of entrepreneurs are just leaving, not necessarily physically, but they relocate their holding companies, their activities, their tax structures, etc., to other jurisdictions where business is more welcome and it's more not democratic, but it's more open and there's less hustle. And definitely, now it's a norm for any reasonable company to have at least a few bank accounts. And have all the additional new bank accounts with electronic money institutions, and with neobanks or with new banks that are far more client-centric than more the old school banks. So that all to me tells the world is changing and there's a move away from classic old school traditional banks, and that tells me therefore that they are maybe too strict, and that this job of deleveraging has gone on a little bit on the extreme side. Would you agree on that, or that's just a necessary part of transforming from where we were?
First of all, I think the reason for that is not only the risking. The reason for that, first of all, I would say European Commission would be so happy hearing what you say, because their objective is to make business to stimulate that businesses are working cross-border and having bank accounts different European Union countries. So the goal is achieved. So it sort of go for fintechs as well, neobanks. Don't remain with classical banks. So that's one of the objectives why financial services were harmonized throughout European Union. So from this policy stance, it's good that something is moving around European Union, not just staying in some local country. And of course, what is the thing I'm advocating for? It's not a bad thing to have bank account outside Latvia. From policy perspective, or business perspective, it means that and state institutions should not be allowed to say we won't pay you anything on this Lithuanian or Estonian account. Why? Or don't pay salary to to your employee, or for example, when he has account in Lithuania.
Somewhere
So
else, yeah.
this on one hand, it's not a bad thing. The risking, why it happens. Bank also is a business entity. They want to earn money, and no one just refuse the client on his own will. So there might be some reasons for that.
Right.
So one reason is that they are over-regulated, and I think it was a deputy governor of Central Bank of England some years ago, and when event he said we should declare victory on 2008 crisis and move on, but this victory hasn't been declared yet. So the regulation is growing and growing.
Yeah.
So considering that banks are the main problem, and we should sort of prevent any other crisis from repeating itself. That's one thing. Secondly, they also are shaping their business. They understand if they make at least one mistake, especially when it comes to sanctions, it will be quite costly. It will be and it might devastate their business completely. Look to some banks, for example, ABLV, what happened to them. Okay, so just one.
But the question is, who is over-regulating, let's say, banks in the Baltics? Is it? That's where I don't understand it. That's where I have a few questions on the regulatory side. So there is the European Central Bank, ECB, yes. There is the local financial
supervisor authority, now Central Bank of Latvia. So
like FKTK. I mean, I always think
the former one, because they are now.
Now they're together with the Central Bank.
Okay,
Okay. So let's say ECB. There's the Central Bank of Latvia, whatever CBL. It's now merged with our financial regulator. There's the financial. What is it? Investigations.
Intelligence unit, but they are not regulating. They are just receiving reports from obliged entities and disseminating them to law enforcement.
Can you explain? And then there's the bank, the poor little bank. Yes. That has to comply with all the sanctions, and then they're fucking all the clients.
No, it's not. It's not. But it's not that simple. You left out something. You left out local legislator, the parliament.
Parliament. Okay.
You left out as well several additional reporting mechanisms and checks put on in tax field, like common reporting standard. You need to understand which client.
That's legislative framework.
Yeah, legislative framework.
Right.
And also this framework comes from European Union, not only from local. So you have local regulations, you have directives and regulations from European Union. Of course, you have several guidances. Most of those institutions working here, they have to stick not only with European and local rules, but also with US rules. On top of that.
Right.
So if you work in UK, you have to follow UK rules as well.
Yes.
So it means there are like several layers.
Okay.
That's one thing. Secondly, if you are a bank and most probably you would like to do payments also outside European Euro area.
Yeah. Let's say we have a business in Sri Lanka and we want to send money to Sri Lanka.
If you want to do that, most probably you need to have something like this. You need to have correspondent accounts in other banks.
Yes.
Those other banks are, I would say, could be divided in two levels. Those big 13 banks, like, I don't know,
JP Morgan,
BNP Paribas, Deutsche Bank. So for that, and this is totally unregulated from whether those banks would like to cooperate with you or not.
It's up to them.
It's up to them.
Yeah.
So then they look, hey guys, you did something wrong before 2018.
Yeah.
Maybe you're, and then they ask questions. Then they are
the regulator
screwing this bank.
Yes. So you have your correspondent bank.
And they're asking KYC, they are doing KYC on this bank. And they're asking a lot of questions.
Right.
For example, do you serve military industry?
Yeah.
What do you do with the clients like Fintechs?
And the funny thing is the biggest crooks in the whole, not crooks, but the ones that have paid the biggest fines for violating
those 13 banks.
The 13 banks that are global and they have like all the power.
Yeah.
So that's interesting. But anyway,
And then they look, so the amount of transactions this account will service is like 0 point something. Okay. So I have to dedicate at least 1 or 2 officers to this account. That's expensive. So they have had issues with someone. Why do I need them?
Yeah.
What kind? Okay, maybe I need them. So that's a decent jurisdiction, European Union. They clean the house, but still I need to KYC on this bank. So then I say, look, guys, I can service your transactions, but please do not work with those jurisdictions and with those types of clients. So I don't want to see any of such transactions in my correspondent account.
And that's just purely business relationship between the correspondent bank and
you can't say, please state something in the law that local bank is obliged to open me account. Of course, you can do that, but then you will most probably you will be allowed only to do local payments, but you are not interested in that. So of course, and then this bank, also Latvian bank, they say, okay, correspondent accounts are important for 98% of our clients. I would say those. But so 2% they're interested in Sri Lanka, some other countries, maybe even countries in this who can be considered as high-risk countries according to several methodology. It depends on which list you use. And they say, are we going to risk those 98% for those 2%?
To service at 2%. Right?
Sorry, guys, no.
Yeah.
So that's a simple way how to look at this problem. Most probably those jurisdictions and businesses in this jurisdiction is totally legal, totally fine with everything. But I don't want to take your risk for 38 cents.
That's all business logic. Makes sense. Yeah. Can you kind of, how to say, so this gives a good landscape of how the bank that services your payment and asks you questions, etc., has to deal with various layers of like legislation, regulatory bodies, business partners like correspondent banks that simply say, what you can do or cannot do in order to deal with us. Like, can you add weights to these different institutions or different layers? Which are the heaviest? Which are like, the hardest to deal with, the most expensive for the banks, the most limiting for the bank itself?
I would say correspondent banks. So that's
okay. I didn't realize that.
Those because it has always been an issue. And if you look at the correspondent banking landscape here in Latvia, you can do that on your own research. Check their web pages.
They have a list of their correspondent banks.
Where are those correspondent banks for smaller banks in Latvia?
Yeah,
to the east mostly. It was Moscow, now China, and those transactions are expensive,
right?
Or expensive.
Okay, so what?
And only top 4 banks they have correspondent banking with those 13 banks, and there's a pool of like thousands of smaller banks where you sort of live. It's downstream correspondent banking where you nested somewhere in some small account, and then only through them you access those big 13 banks, because it's not easy to. It's like a post. You can't access a bank in Sri Lanka if you don't have several links to Sri Lanka. If you have one from JP Morgan, most probably has some presence there. I don't know, maybe. So it's easy. You have direct relationship. Most of the banks will never be able to have direct correspondent relationships with those top 13 banks.
Right.
Maybe just those 4 banks we have here, even for them it's hard.
It's hard, yeah.
Okay, we will open you 1 account.
Yeah.
2, no. So that, and if we open it, we need to clear policy on what will go through there.
Yeah.
When it comes to the weights you ask, so correspondent banks are top 1. I would say that's a main priority. They are most hard to deal with because the business logic is there. So they are not obliged.
Yeah.
They are not.
They can do regulator.
They are not debt to you, so they can do everything they want. Then it comes for the legislation. Legislation comes next. We still have some layers of old school norms in the law. For example, when we speak about politically exposed persons, we also mention grandchildren and brothers and sisters. It's not the case with directive says. EU directive says, no, those are not politically exposed persons. But locally, we had to say that they are because of the fact that we had a number of clients from Russia and Asia where those family ties are closer.
They were used as rat holes.
They are gone, but the regulation is still in place.
Right.
We had a lot of such at least a number of legal provisions which are now amended. And
you're talking specifically Latvia?
Latvia. And the same might apply also to other countries. It depends. Each country has its own unique risks.
Yeah.
For example, if you had we had 50% non-resident deposits in the past. So you can't take more risks on top of that, because the police is not able to deal with that.
Yeah.
For example, Lithuania didn't have such a amount of non-residents. They could afford to take fintechs as additional risk. The volumes are lower there, so you can't move like billions in a day. And therefore, they went for other approaches. Estonia did something wrong. They now admit it is a registration of virtual asset service provider without any proper checks.
Yeah. That's
Now
all
they
the
have
crypto
to
firms are in Estonia.
Yeah. Then now they are getting rid of part of them, at least those who we don't know anything about them. So they could afford this. We couldn't. Our business model was being bridged from the east to west, bridge for corrupt and stolen money. On weights. Next is the supervisor. The supervisor is very important to understand how, because they are
Who's the
auditing
supervisor?
Central Bank of Latvia.
Central Bank, yeah.
Supervisory institution. Then it was Financial Capital Markets Commission.
Yeah.
So what approach do they have in their guidance? They issue a lot of guidance on AML, on sanctions, on several risks, how to mitigate them. And then they are auditing you. So you see what requirements do you face when you're being audited. So you know how to adjust your KYC procedures. Then you would what questions you would ask when your customers are doing some transactions.
Yeah.
So in this case, this audit approach was quite strict. It was too strict. I've been participating in at least 6-7 audits, and those usually they didn't end up well.
Right.
And
so the responsible
after every audit, it was new next wave of the risking. Sometimes it was even an annex to the settlement agreement. What you should do risk in the past
between the bank and the central bank.
It was in the past, and then there are private audits, which are mandatory each 18 months. And when those private audit comes, they have to find something. And what they do is they again provide a list of discrepancies and what should you do to tackle those additional discrepancies found. And on many instances in the past it was the risk.
Right.
And those audits
always the answer was de-risking.
Not always, but on many instances it was the simplest and easiest answer. And those audits carried out by supervisor and private audits, not always they were aligned. Sometimes they're contradicting themselves. Right. And then you have one additional private audit. It is annual report audit. Sometimes those private auditors added some additional compliance questions also on annual reports when you're doing auditing annual report. Yeah. So it was like a nightmare of audits, and
and this has all started from, as you mentioned, 2017, 18, 19?
This even started 2016.
Okay,
the first one.
And would you say that the central bank in Latvia is overzealous, too aggressive with?
No, I would say that it was. I understood why they did it, because if the kids in the kindergarten. If they don't behave, you have to be more strict with them. You have to check their bags with a bead or something.
What about now? Now 5 years passed.
I think after 2020, the things massively improved, because they issued several legal provisions which were burdensome. They were and meaningless. They were abolished.
Right. How did that happen? These things that got
discussions with the industry and the supervisor. They were quite welcoming. We were discussing those issues by substance. The discussion was there.
Right.
And then also guidance. The guidance book on how to manage properly AML and sanctions risks. I think there is no supervisor in the whole European Union who has issued something like that. So the guidance of explaining, which is something that you're doing too much,
right,
and something you're doing you should do more. So that's an example. So and this helped compliance officers to be less stressed. So if you're less stressed, boundaries. So we don't need only to focus on regulations. how people conduct the conduct of the compliance officers. So if you see that supervisor and audits, they are aligned with the new reality, when they understand that everything they say might lead to the risking or massive de-risking, then when all of them are on the same page, private auditors, supervisors, auditors, legislators, then compliance officers understand, okay, now they are not looking for me to be killed because of some mistake, you know. And then if they understand the landscape, where the risk landscape, regulatory landscape, what is expected from them, then they are more or less less stressed, and then they can actually apply risk-based approach, not just go for the risking.
Okay.
So that's the mindset.
Yeah.
It takes time for them to be more trained, and then they understand what is expected from them. It's not just, you know, some legal provision and in the law, and you say, okay, I understand that, and those interpretations can be quite.
Okay, if we go a little bit, that's very interesting. This landscape, and if we go from this broader picture into something more narrow, more specific. Let's say if you have, I don't know, clients in Latvia that are just regular business. Let's say, I don't know, 5-10 million revenue per year. They've been around for a long time, and then one of the banks decides to close their bank account. And let's say I've had that situation, and there was absolutely nothing I did wrong. I made a payment to a crypto exchange to buy some Bitcoin. And then I got like a fuckload of questions. For 2 months, my account was frozen with hundreds of thousands on it. I answered all the questions, etc. That went back into the past for like, I don't know, 5 years in history. And then they said nothing, and then they shut my account. So that was exciting. So let's say if you have instances like that happening, and I know the trigger was the payment to a crypto exchange, a regular, like, a well-known crypto exchange. Is there anything you could say to people that experience this, business owners that experience these kind of situations? Is there nothing you can do, and you just go open an account with Wise or with other new fintechs, or there is something?
Technically, you can file a complaint to supervisor. They will examine the case, but those complaints are quite rare. Surprisingly. Right. But let's a bit analyze your question. What was the thinking behind this one? The problem with virtual assets and crypto is that still financial institutions all over Europe, it's not only Latvia, they are not equipped, and they do not understand how to do compliance in crypto transactions. You need additional tools, and they are not cheap. Yeah. And you need and they don't have those capabilities. They haven't built them. They said in their risk appetite that if most probably, and I think it is the case, that if the crypto business is related to your economic operations, then we are not going. Right. If you are a private citizen buying one Bitcoin and selling them, okay, we are good with this. But still, I can't check, if I don't have all those capabilities, how legit was actually this transaction, where this Bitcoin have been before, who was involved in the transaction. I don't have those capabilities. So if I can't check the risk book, I don't take the risk. Right. So it was not personally directed to you, but this financial institution most probably didn't have any means how to manage this risk, and they didn't have any, I would say, even interest to do so. But now, after MiCA regulation is passed,
which regulation?
MiCA regulation, it's about cryptocurrencies and virtual assets. So I think the European regulation, it's quite long. Okay. And after MiCA regulation is in place, I think financial institutions, they need to be more equipped and be able to do due diligence when crypto transactions or virtual asset transactions are in place.
And this MiCA is passed, and I'm not.
I think it's passed. So so many things are going on. So, I think it should be even enforced now, and not only passed by European Parliament and Commission. So. That's the way how banks look at this. So the main issue for SMEs, I don't think that it's crypto. Most probably is that they might have some person who has done something bad in the past. For example, operating one company, liquidating, transferring assets in a quite a questionable way to other company. So and continuing this business for years. Secondly, there might be some person with I would say involved in some corruption scandals in the past or ongoing. A person who does not provide any information and bank requests it. Maybe there was some specific case of something illegal which took place, and bank says, okay, we know that you have sort of you have been stigmatized for that. Of course, we might open your basic payments account to buy something in a grocery store, but we are not going to service you as a customer. Therefore, those clients might go to some other jurisdiction where they are not so popular and well known. So that's also a thing. Maybe this is the way how this is approached from the bank. But if you look at the local landscape, so this Russian money to be laundered here maybe is not the main issue now because the payments are quite complicated or even not possible. Right. But still, we have 20% shadow economy. Shadow economy and corruption, it goes hand in hand, and they generate illicit funds. Right. Most probably several billion annually.
What's the normal percentage of economy that sits in the shadow economy that would be accepted? Because you can't go to zero, obviously. Is it of like 5-10% or?
Around 10, 5.
So there's still a job to do.
Yeah, we have a lot to do. It means there still is something which what generates illicit funds. If there's illicit funds, so if you steal the money and buy wine and drink it in the evening, it's not money laundering. Right. So if you try to hide the illegal origin of these funds, doing something so making payments from one account to another, and then investing, buying something and selling, that is money laundering. So those are specific activities to hide the illicit origin. So if you have a local economy generating around billion or even several billions of illicit money annually, so it's a lot of money. At least part of it needs to be laundered. So someone is doing the job by and they need the cash to pay under table wages. So the main issue we should focus on how to tackle shadow economy. Then it's hard to distinguish from the bank. So who is the good guy and the bad guy at first sight? You're not a doctor. You're not doing blood tests. You know, it's not written there. Who are you? So and sometimes therefore some new companies are being confused with someone who is establishing a company just to be a shell company or shelf company or doing some fake. I would say tax evasion for tax evasion purposes, and then for someone who is actually starting their own business and.
Okay, just a little. I forgot to ask a question on this landscape and the various parts in it. This institution that I actually didn't know about, the financial
intelligence unit.
Intelligence unit. Yes,
it's crucial actually.
Can you talk a little bit about that? And a friend of ours and our legal and tax consultant, he was talking about the former, if not the current, head of that unit. Is Notiņa?
She was
notoriously aggressive with zero tolerance towards any bad transactions in the banking system. Can you just like a little bit talk about that?
First of all, I think she did a great job because she was tasked with one thing, just one objective. Latvia is not grey listed by a Financial Action Task Force.
Okay,
and
that's American.
It's international. Okay, all the biggest economies are there.
Financial
Action Task Force (FATF). This is those letters you should know by heart when you work in anti-money laundering. FATF is everything.
Okay, Financial Action Task Force
with their recommendations, immediate outcomes. So they are checking jurisdictions, they are analyzing jurisdictions, and providing typologies, explanations. What is the best practice? And they're maintaining two lists: blacklist and grey list. Blacklist means jurisdictions who
toxic,
don't care about anti-money laundering, just laundering. Right. And grey list is those who have significant deficiencies. So
and you're talking jurisdiction level, or are you talking about institutions?
Jurisdiction level.
Just countries.
Country. Okay. The list of country. For example, Turkey, Arab Emirates. They are, I think, still in the grey on the grey list. Grey listing for small economy.
It's very interesting that somebody decides that somebody else is in the grey list.
Yeah,
right?
Estonia just passed the test, so they were quite close to grey listing as well.
Really?
And yesterday the report was published that they have deficiencies, but not as much to be grey listed.
But sorry, and the countries, I suppose, or the governments or whatever institutions that
expert level, and governments, of course, they're political
and
political
those are purely Western, I would imagine, countries.
Not only FATF, also Russia is quite active there.
Oh, really?
So at least it was.
Yeah,
now it's probably some issues with traveling, But they also were there, so they're quite well on. For example,
so it wasn't like a bunch of let's say America, England, Germany coming together and saying, okay, you're bad. It's not exactly like that.
It's also Israel there. It's also Russia there. And there are several institutions like FATF globally. So, but it's a standard. They are setting standards.
Right.
And her mission was quite one and simple. Latvia is not grey listed,
but
there
was
no.
At that point.
It wasn't.
It wasn't. Okay.
We got through it. If she didn't her job quite well, we might ended up in to be fully de-risked by correspondent banks. It means you have no means of payment.
Disconnected,
basically. You're disconnected, yeah. Because if a passenger refuses to or carrying dangerous goods, it's not allowed on the airplane. Same here. So that's a list of passengers who are not allowed to fly. I don't know, some planes at least.
Yeah.
So and she did the job. So of course it did some I don't know. There was some collateral damage, of course. That's that. But the objective was received. This was her job, and she actually reformed the financial intelligence unit in in a modern institution, which is well known outside Latvia. Because the way how you please those FITF and other experts is that you are internationally active,
right?
So you have best practices to share. And this zero tolerance to financial crime should be the motive. Of course, it will never be zero. Financial crime.
It's a slogan. Or
at least you have a commitment.
Yeah.
Commitment to culture of compliance. So you are not cooperating with someone who does illegal stuff. So and she did the job quite well. And of course, she wasn't reappointed. I would say she was a scapegoat.
Right.
So for everything that happened, but. I would say
fired
that no, she wasn't reappointed.
It wasn't reappointed.
Yeah.
Okay.
It wasn't pleasant, of course, and did not anything good to Latvia's reputation abroad, because she was quite popular, well known in.
But she didn't get reappointed because there were these.
Because everybody, those who voted against her said, she's to blame for everything.
Right.
So,
right.
But if you look to the collateral damage in details, I would say. Of course, there are clients who have been de-risked, but she hasn't passed any law. So she was just heading the mission.
Implementing.
Even not implementing. She was just heading delegation. She was like putting together the file, the portfolio, what Latvia has done.
Right.
What is our progress? So and she was just this collateral damage, but you see this money in, money out business. So. This was stopped, and they didn't do any added value to Latvian economy. But you see what kind of investments we missed, those jurisdictions. Those are not jurisdictions who are usually, I would say, which are we aiming at?
Right. Yeah. I was sometimes thinking about an alternative for Latvia as an offshore center, whereby instead of having very little to no non-resident deposits and not servicing non-residents, rather maybe the alternative would have been to create a system whereby we welcome non-resident business. We are a well-known offshore jurisdiction and a place to do business. We think carefully about making sure we don't service outright, fraudulent, illicit money, etc. But the focus would be on making sure that the economy gains as much as possible from servicing this non-resident business. But it seems like it has not been a countrywide strategy. We have obviously had these banks, and we had tax advisors, etc.
It was strategy of the past,
right?
what did Lithuania differently? It wasn't about banks opening accounts for fintechs. It's not the case. Lithuania's success story is one and simple. Central bank let those e-money institutions to access single European payment area, so the core system of payment of European Union to access directly, which is not the case in any other jurisdiction in European Union, including Latvia. So then you have to open an account with some bank and ask your competitor, a bank, to provide you access to this SEPA payment system.
Can you repeat this? Can you repeat it? So Lithuanian, was it the central bank or was it the parliament?
Central bank. Central bank. They decided, I think it was most probably decided somewhere politically as well.
Sure.
So they should be quite open for fintechs. And fintechs needs what they need. Fintech company needs access to payment system.
Yes. And what's the name that you...
SEPA payment, Target 2 payment system. To access this payment system, you can do in two ways. You have sort of correspondent bank, local bank, which services you. It means this bank has to take your risks as well.
Sure, as we talked about.
And it's sort of, and this bank is sort of your competitor here locally. So why do I need to service my competitor? But still, of course, I might. To do that as a bank, it's my choice, for example. But it's still more expensive because you have to pay fees. Then Lithuanians said, no, you can access directly. We as a bank are providing, as a state, providing service to you, e-money institutions, to access this Target 2 SEPA payment system directly through us.
Right.
So that was
there's the Central Bank of Lithuania. There's all the newcomers, EMIs, neobanks.
And then understood that they have a unique opportunity to be to access directly through central bank. Of course, they are not direct participants, but they are directly through the central bank, not through some commercial bank, which usually is quite complicated to find one which with more favorable fees, like LHV in Estonia. Some local banks here also are more open to those companies, but still. It's harder for those fintech companies to find a way,
and more expensive.
And it's more expensive, but there's logics because some of those e-money institutions we are bank, but with less regulation.
And the reason why, for example, Latvian central bank didn't do this was because we had the heritage of.
No other jurisdiction did that.
So they were very innovative.
We are not unique. Lithuanians are unique. We are not unique. We did all other countries in the European Union are sticking to the position. Let's change the directive, which regulates who can access directly those payment systems, this payment system, and then when it is amended, then of course we can discuss this matter.
So Lithuanians were innovative and advanced in this way,
and central bank took the risk.
Yes, took the risk
because not passed the risk to commercial banks, but took the risk itself.
Right. And it has paid off for them, would you say?
I think that it has paid. Of course, when you look at some evaluation reports from international institutions, they are now expressing some concerns about Lithuania's fintech business because there might be some risks which are not properly managed. But, no one can say to you that you should, as a jurisdiction, should not take this risk. They usually ask,
it's your
what do you do to mitigate the risk?
Right.
Because you are not this passenger with something illegal and harmful for others in the plane. So Lithuanians usually what they do, they try to prove that do more inspections, fire some members of the board in some financial institutions. So doing more inspections. So it means. For example, if you look at N26 as a bank, considering what's publicly available, their supervisor asks them to be more staffed, so more people to hire to check transactions, to monitor them.
Compliance.
So you can sometimes those companies are growing faster than the compliance can keep up.
Sure.
And this is the main issue, that you should not be in the banking business doing something like that bank does, but without compliance burden, which what bank has. So, and this is something that it might be hard for Lithuanians also to address, not to put too harsh measures on them. At the same time, keeping the risks in manageable level.
Check. Yeah, gotcha. Okay, I think that's it for me, Edgars. That was a pleasure. You educated me very well, and I hope also the listeners and viewers will be enjoying the information you shared. So thank you for having me. That was cool. Thank you.